2025 is not the same type of year as 2024 and 2023 in the markets. These markets are not easily pleased. I'm going to talk about what I mean by that for US indices, and I'm also going to talk a little bit about metals and what's happening in the currency world as we had some really interesting PMI data drop this morning. So we had PMIs all over the place here, but what specifically moved US markets and gold and everything here this morning was the US PMI numbers. And specifically, Services PMI came in at a big old whopping miss here this morning. Forecast was for 53, which would have signaled growth in the US services section of the economy. Instead, we got 49.7. That was a pretty big miss. While manufacturing came in pretty much in line, this miss is huge since services make up a massive majority of the U.S. economy. And so you can see right around when we started getting that news, the U.S. stock market dropped off really strong. And so you might say, why the heck is the dollar up today? So this is where people who are not fans of fundamentals will say, haha, you thought fundamentals were bearish and why'd the dollar go up? Fundamentals is nonsense. It actually makes really good sense why the dollar is up, although it can certainly be confusing, understandably, to people who may be new to fundamentals. The dollar index is up on this Services PMI number, which came in light. And that's causing also, by the way, stocks to plummet lower here, down 0.8% following yesterday's sell-off. So what's going on? Well, specifically, we need to take a look at yields. Yields are down, and usually when yields are dropping, which is a forward-looking indicator of what the Fed is likely to do next with interest rates, this is bond yields. U.S. Treasury yields are lower here this morning, offering less on bonds because people are a little bit cautious about the outlook of the economy. With tariffs coming down the line and forecasts by companies in their earnings calls, many companies are calling for slower revenue growth this year. And that is concerning. The market is forward looking. So you then get a PMI number like today, and the market says, okay, growth expectations are looking a little lackluster. So you got the NASDAQ down 0.86%. We'll see if this proceeds to continue lower, but my cautionary tale here is, you have growth figures coming in soft. We've been talking about this repeatedly on the channel. The US economic heat map is flashing red in many, many departments. And this is why personally I have been really cautious on US indices as of recently. By the way, we're giving away a free copy of the Edge Finder today in our Telegram channel. So if you're not already in the Telegram, it's completely free to join. There's a link in the description down below to join, and make sure just enter your name in the hat for a chance to win an Edge Finder copy in the Telegram. You can see the link is right there. Just click that, put your name in the hat, and you might win a copy. Who knows? But even if you don't win, you'll get bonus content and stuff like that shared with you inside of our Telegram completely for free. We're sharing market analysis. Frank wrote this one up here this morning, so make sure to join if you have not already. Whether you want to join the giveaway or not, it's great free value that you should definitely check out. So let's get back to the big question. How then is the dollar index up today? Well, part of the reason that the dollar is up today is because this is why personally I actually prefer, if I want to play a pure kind of US economic data stuff, I'll usually trade bonds. Specifically, the dollar trades against its peers. So when we see other places seeing more weakness in their economy, on a proportional basis or on a relative basis, the dollar still looks relatively strong. That's what can be confusing about currency pairs. You have to track two economies at once, which is a lot of work and a lot of difficulty. It's hard enough to track one. But with currency pairs, right, you're trying to track Europe versus the US, but Europe seems very likely to cut rates. And then you also have the pound. The UK definitely is looking to cut rates, weakness in their economy as well. Specifically, here's the European economic heat map, which is showing a lot of contraction, right? You have PMIs coming in soft here, retail sales coming in soft. You can see they definitely are dealing with a slowdown in their economy. And so you're getting lots of calls to cut rates aggressively in Europe, which makes the euro relatively weaker than the US dollar, which still seems on hold of whether or not it's going to cut rates this year. Maybe with recent economic data, the US is likely to cut once or twice, but it does seem like the EU is likely to continue to cut to really try and stabilize their economy, which is seeing a lot less growth than the US. Just for context, GDP growth, 0.1% for Europe. Meanwhile, it's at 2.3 for the US. So remember, if you're a currency trader, you want to understand the differences in the two economies that you're looking at, and this heat map tries to make that very easy within the Edge Finder. And this uptick in the dollar is a little bit bearish for gold, but really gold is remaining very, very resilient, at least at the time of recording this. We've had a really strong upward trend. I wouldn't be surprised if we get a pullback here on gold, but I don't personally think calling for a pullback is the right move either. Sure, we could see one, but I'm not betting on it happening today or right now. I also wanted to talk about TLT, which is a position that I am currently in and benefiting from the recent fall in the 10-year yield dropping. Same thing specifically with the 20-year yield as the TLT trades long duration treasury bonds. So I'm long TLT, and this trade is working out pretty well so far. And you can see after a lot of patience, my trade is actually back in the green. It's gone sideways for months. This has definitely not been a very exciting trade, but I am long TLT and it is overall back in the positive territory. And I do think we actually have room to potentially break out here. We're seeing a lot of economic data in the United States come in soft, and if that trend continues, TLT should benefit from falling interest rate yields, and bond prices typically do the opposite of that. So I like the trade and I'm going to stay with it. And it has high correlation, by the way, to the Japanese yen. We've talked about this a lot on the channel. The Japanese yen, as another theme or idea that I've been recently talking about, looks really attractive. My Swiss yen short position is looking pretty good today. We're back towards those lows. I'd be very curious to see if we can actually break out through those lows and continue that recent downward trend. Both of these trades, the TLT trade, the CHF JPY trade, the silver position, all of these trades are being shared as signals inside of our VIP room. If that's something that you're interested in, you can check out the link in the description down below. And if you chat with us using the first link, you can find out more by chatting directly to a member of our support team. They can give you some answers about questions you might have about the signal service. It's not a blind copy service. It's an educational service where you can see every trade I'm taking with full breakdown and analysis. Here's an example of what I mean. So the Swiss yen trade that I just mentioned, I'm breaking down exactly what I'm seeing, why I'm taking the trade, economic heat maps, momentum, price action, every reasoning behind why I'm taking the trade gets shared to members. If that's something that would be beneficial in your trading journey, to see someone who trades in maybe a way that you like to trade or are interested in learning more about, you can consider joining our signal service and getting every trade I take sent directly to your phone or to your desktop. All the information can be found in the description down below. And because it's Friday, and if you sat through my little advertisement here, I just want to encourage you, shoot us a direct message on our website using the first link. Let them know you saw this video and that I promised an extra discount, and we'll honor that until the end of the day. Okay, flash manufacturing PMI came in pretty much as expected, and services came in a little bit light. Okay. Market reaction here, dollar index is lower. Stocks, they were already lower, so I would call their reaction not too much in either direction. Gold is slightly higher on that, Bitcoin slightly lower. Okay, we'll come back and take a look at that in just a second. This is really important stuff. I really want to make sure I hit this message to people who are on the cusp of joining the dark side right now with us. What I mean by that, as you know, dark side is my analogy for the fundamental analysis. You know why it's fitting to be on the dark side? You know why the fundamentals, the macro, that side is the dark side? Because those big, bad Wall Street bajillionaires that dominate the markets, we would call those the dark side, right? They also use fundamentals. That's like you listen to any interview. If you don't believe me, I'm not making this up. I'm not saying this because it fits my narrative. I'm saying this because my narrative came from understanding this. The big Wall Street guys, listen to them in interviews. They're not talking about head and shoulders patterns. They're talking about macro. They're talking about what the Fed's doing, talking about business financials. They win on the markets, do what the winners are doing. So they're talking fundamentals. So I was talking about PMIs and why I love PMIs. They're forward looking, because if you asked a bunch of CEOs, I said, let's put all the Mag 7 CEOs just as an example, Google, Amazon, Microsoft. You ask all those CEOs, are you hiring right now? Do you see bigger than usual sale orders coming in right now? Do you have headwinds in your business? Do you have higher costs coming in that are making your business harder? Do you see your business growing a lot, a little, or some this year? If you could ask those people those questions, they have the insights to tell you, not with certainty what the future is going to be like, but a good indication of how their business is likely to perform, because they have all the KPIs, all the metrics in front of them. That is why I love the PMIs. It's forward looking. You're asking a bunch of key hiring managers and purchasing managers and people who make decisions at all these businesses. You're asking them their forward look of the economy. If they all feel good, that's a good indicator. If they do not feel so good, that's a forward indicator that we can use. So that's why we look at fundamentals, because fundamentals create trends that create price action trends later. That's why we look at fundamentals.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.